Low-income people will suffer. In this episode, I'm going to address this topic, tax changes that will affect everyone, not just the rich. Get ready. So my name's Doug Andrew, and I've helped many people for 4.5 decades optimize their financial assets and minimize unnecessary taxes. I need to tell you, I'm a red-blooded American. I think we should all pay our fair share of tax, but I've never met anybody in America, Republican or Democrat, because this is not a political agenda on this video, okay? That if they had the choice of redirecting otherwise payable tax to causes they support, that they wouldn't seize that opportunity. And so let me share with you what I'm really concerned about right now, because a lot of people are feeling confused, isolated, and powerless when President Biden talks about raising taxes. He assures us it will not affect the middle income and low income people. And I go, what? Because he's not going to come out right on the surface and raise taxes maybe for those people, but it ripples and affects those people. So let me share with you how and what you need to do to protect yourself, because his proposals are going to affect everyone in every single income category. You ready? So as I teach you this, if you gain insights that you didn't have before and you can think of somebody else you'd like to share this with, be sure and do that, or click comment or like, but subscribe, because I post an in-depth answer or a commentary on current events almost on a daily basis on this channel. Now, what are some examples that President Biden wants to change with taxes? Let's go to the 401k proposal. A lot of Americans try to save for retirement in a 401k, and for years they've been allowed to put in pre-tax contributions. So let's say a person earns $100,000 a year and they contribute 15% to a 401k. That's $15,000. Up until now, you only had to report $85,000 of your $100,000 on your 1040 tax return. Okay? You were contributing pre-tax money. Biden wants to do away with that. You have to report the whole $100,000 of income on your 1040 tax return, is what he's wanting to do. And then he'll give you a tax credit. Now, he's thinking around 26% to start. 26% would help maybe middle income and low income people to get a tax break to use a traditional IRA or 401k. But for some of those who earn a little bit higher than middle income and the higher income earners, he just took a bunch of money away from you. It was a tax increase by doing that. So people say, well, there you went and admitted that it's not hurting the low income people. Yes, it is, indirectly, because what happens is a lot of those people are not going to even have a job to contribute to a 401k because of what else he's doing. So the corporate tax, and I have another YouTube that explains the corporate tax that he wants to take from 21% up to 28%. What's that going to do to corporations? A lot of times people say, well, they can afford it. No, they can't. Do you know the average corporation in America only operates on about a 2 to 3% profit margin? On $1 million of corporate profit, under Trump, they only had to pay $210,000 in tax. Biden wants to raise it to $280,000. That is 33% more than $210,000. I'm here to tell you, corporations can't do it. They're already planning, based on that announcement from President Biden, on laying off people. We might see 1 million to 2 million jobs go right out the window within 30 days as corporations have to tighten their belts and they have to put off expanding. So all of a sudden the construction crew and the architects and everybody that was going to help the plant expand, they're all laid off because he's raising corporate taxes. And so the people that he says he doesn't want to hurt are the ones that are getting hurt because they're losing their jobs, and the corporations are going, okay, we're going to have to switch to automation. We can't use humans anymore. This is going to happen. So that's the corporate. It's a ripple effect. Now, he has proposed raising the minimum wage to $15 an hour. Sounds pretty good, right? Let's rethink our thinking. You ready? So, $15 an hour, minimum wage, sounds good, especially for people that live in San Francisco or New York, where the cost of living is through the roof. And so, yeah, that might be a good minimum wage in San Francisco, but in the Midwest, where the cost of living is half or a third of what it is in San Francisco, you have an employer who's, let's say, employing 10 people at $10 an hour, just to be simple. So he has $100 an hour in his budget, this business owner, to pay 10 employees, and all of a sudden, there's a $15 an hour minimum wage across the board in the country, and so he has to pay 15. He doesn't have 150, he only has 100, so he's got to lay off what? 3 people. And he still has to tighten his belt because he has only 7 employees now paying $15 an hour, which is 105, and his budget was 100. This is why the Congressional Budget Office says that when the minimum wage, if it gets passed across the country, right off the bat, about 1.4 million jobs will be down the drain, gone. And so if the companies were expected to, oh, come on, keep the employees, raise your prices on what you're selling. Okay, well, hopefully they can stay in business, but if they raise their prices of their goods and services, all of a sudden, the employee that gets $15 an hour didn't really see an increase in their standard of living. Because now $15, when gas has doubled, food has doubled, $15 doesn't even buy what $10 used to 4 years ago. It's hurting the very people that he's proposing to help. But it sounds good and they'll get votes if they do this. And, I just get so concerned because sometimes they don't understand the very people they're touting that they're going to help. It ends up hurting. So that's why raising the minimum wage to $15 an hour is myopic. It's short-sighted. They're not looking down the road. What else should we be concerned about? Now, on this channel, I have a lot of other YouTubes that talk about the changes that Biden is proposing for capital gain taxes. There's a lot of people that own highly appreciated assets that they purchased years ago, stocks, bond, gold, silver, I don't care, but it's usually real estate property, okay? Rental homes or duplexes or what have you. And they buy these properties, and over time, they may double in value every 15 years or so at just a 5% annual appreciation rate. It's very common. I meet people all the time who bought a rental property for $250,000, and 30 years later, it's worth $1 million. Sometimes it's way more than that in California. Well, when they sell that, that's a capital gain. And under Donald Trump, for example, under his administration, you would pay a 20% tax. Now, I sold a commercial building about 1.5 years ago, and that capital gain is added to your ordinary income to calculate the tax rate. So I jumped right to the 20% rate. Biden wants to raise that to ordinary income rate. I can assure you, if you inherit a piece of property or you sell a highly appreciated asset and you have to pay a capital gain, that's going to force you to the 39.6% rate, most likely. So that's just about double. So he's going to double the capital gain tax, and then he also wants to do away with what is called the step-up in basis on long-term capital gains, so that if you thought you could hold on to that and leave it behind to your children, and they would avoid paying the capital gain because they get a step-up in the basis. They only have to pay tax on what they sell it for over and above what it was worth when they inherited it when you died and left it behind to them. Now, President Biden wants to have people who inherit, children who inherit from their folks, have to pay a capital gain on the entire gain from what the parents paid for it day one. This is huge. Some people have not calculated this. This could be the difference of paying $20,000 in tax under the old law to over $400,000 in tax if they do away with the step-up in basis, and a rental home went up in value from $250,000 to $1 million. If this is intriguing you, be sure and watch the video on capital gain taxes that I have on this channel. So what's the long and short of all of this? We are here in this situation because of the stimulus packages that have been passed. Primarily at the recording of this video, there was a lot of stimulus spending because of COVID-19, okay? And I'm not going to argue pro or con, but basically during COVID-19, the federal government had a budget of about $5 trillion. That's how much the IRS collects in taxes. Now, oftentimes the government spends more than they bring in. I don't know how they keep doing that. They keep going deeper in debt. I mean, if I, with my wife, kept spending $200,000 and we only made $100,000, how long can we do that? No, but the government seems to be doing that. So what's been happening is they've already gone through about $5 trillion, more than the $5 trillion that they bring in. So they've spent about $10 trillion and they only bring in $5 trillion. Okay, they've spent twice what they bring in just with the stimulus packages. Now they're talking about additional proposals, infrastructure of $2 trillion. And from what I hear, less than 10% of that is really going to freeways and bridges and roads. It's only 10% is going to infrastructure. The rest of it is all kinds of other stuff. The point is, they can say, look how wonderful this is going to be. But Janet Yellen, who is the Secretary of the Treasury, says, you know what? Congress, if you pass this, you've got to at least come up with half of it with new tax revenue by raising taxes. And that's why Biden has all these tax increases up his sleeve. The problem is you cannot raise taxes just on the wealthy or on corporations or on capital gains without it rippling down and hurting everybody. And people say, well, he didn't raise taxes on the low income. No, but he created the situation where they no longer have a job. What would they rather do? Pay a little bit more in tax or just be unemployed? See, this is serious stuff that causes recessions and unemployment. So these are tax changes that will absolutely affect everyone. If you want to make yourself immune from taxes going up, inflation eroding away your purchasing power, and the market volatility that happens because of these recessions, let me show you what you can do to learn to protect yourself from the negative impact of taxes, inflation, and market volatility. I've been very, very blessed to have written 11 books so far. My 12th one's coming out shortly. And this one has been flying off of our warehouse shelves. It's a 300-page book that's called The Laser Fund. And it has all kinds of charts and graphs and explanations and actually 62 client stories in here of how my favorite vehicle, which I call the Laser Fund. Now, LASER is an acronym that stands for Liquid Asset Safely Earning Returns. This teaches you how to diversify and create the foundation for a tax-free retirement. I'll tell you what, you don't need to pay the $20 retail. I will gift you a free copy. So I'll pay for the book. Here's how you can claim your free copy. If you go to LaserFund, LASERfund.com, or click below, and you contribute a nominal amount towards the shipping and handling, I'll cover the rest of that and I'll fire out a copy to you. And there's options there if you like to listen and learn or watch and learn, because I'm big into education. But this is how, for over 45 years, I have accumulated my money tax-free. I can access my money anytime I want tax-free. When I die, it blossoms in value and transfers income tax-free. Nothing else in the Internal Revenue Code does that. And it's a sacred tax-free cash cow that has been grandfathered for 107 years. And I want to empower you with this because a lot of Congress people own these, okay? And so claim your free copy, go to laserfund.com, and here's to your brighter future.